Hi guys, Kayong here, back with another weekly video. We've been missing this for approximately 2 weeks, alright? But we are back today with sharing with you more of our market insights as well as some of the outlook that you can potentially take this week itself. So let's take a look into this week events calendar first. Right, Monday is pretty much quiet. The only thing that you need to take note of if you are trading later on will be on UK services PMI. It's expected to come in slightly around the same as the previous data at 54.2. For now, we do see that the bullish strength or the bullish momentum on the pound is pretty strong. So if this data comes in, in line with expectation, we might continue to see strength on the UK pound itself. And of course, if it's a miss, we might see some dip into it. All right, and of course, how much price will move really depends on what was the miss. If it's really a huge deviation, all right, we might see a greater movement on the UK pound itself. On Tuesday, right, the focus will be on the Australian cash rate and the RBA rate statement. You can see that the expected cash rate is to remain unchanged at 1.5%. We personally believe that highly unlikely the RBA will gonna cut rate further. So this one you just need to take a look at the rate statement, seeing whether they provide any forward guidance going into 2017. Alright, so this is naturally, if it's a dovish statement, we would see Aussie selling off, and if it's slightly more towards a hawkish statement, we might see it being supported. Alright, and you need to also take note that Aussie right now, our stand is more towards the neutral side, so it really depends on the sentiment. Alright, fundamentally we are neutral, so if it falls back down to sentiment, what is the current market risk environment that's gonna drive the Australian dollar. Later part of the week on Wednesday, the focus will then go towards the BOC rate statement as well as the overnight rate. Again, analysts is expecting an unchanged at 0.5. We believe that highly unlikely the BOC is gonna do anything at the end of this year. Again, looking out for the forward guidance going into 2017. Alright, very similar to how you're gonna trade the Australian dollar. The only thing that is interesting on the Canadian is that recently last week OPEC has agreed in reducing their output production. Alright, that gives strength to the oil prices, and that will translate into strength on the Canadian dollar as well. Alright, so if the BOC statement or the forward guidance remain pretty neutral, we might see the momentum from oil spilling off into the Canadian dollar as well. Alright, so overall we might see some strength in the Canadian dollar. Later part of the week on Thursday, we have the ECB minimum bid rate as well as press conference. This will be interesting because the last meeting, or last press conference, Draghi did mention about December, giving us some information into 2017. Alright, so do take a look into the press conference, especially the forward guidance aspect of the ECB. Highly unlikely they're gonna reduce their interest rate or taper for this meeting, but the forward guidance is going to be important because that will put in place and give us some information right into 2017. What will the ECB do? Right, so this is definitely the highlight for this week itself. Friday for this week is pretty quiet. Alright, we do only have the prelim UOM consumer sentiment. It's not a market moving indicator, so Friday is pretty quiet overall. Alright, so this week itself, the focus is definitely on Australian dollar, Canadian as well as the euro. Alright, so let me bring you to the technical aspect of how we engage this. Let me bring you to the Australian dollar first. First off is I would like to share with you quickly that this is based on Elliott wave theory. Alright, so right now, based on this simple wave theory, I won't be able to go through in depth, alright, how we derive this or what does this mean, but I'd just like to share with you quickly on the outlook based on the analysis that we've done. Alright, so for Aussie dollar, AU itself, our forecast is that it's currently completed its fourth wave correction. We are expecting another down move towards at least minimum 0.727. Alright, it can go even lower towards over here I wrote 0.7140. Alright, so for this week itself, we are still looking to sell the Australian dollar. Alright, and we'll take a very close look into Tuesday RBA rate statement. Alright, so this is a forecast. So how we can engage the trade, we do need a strategy to engage it. Alright, and that strategy can comes from, depending on what strategy you are using. But over here, we shared with a lot of our students, we are using the basic 3 strategies: a trend following structure strategy, a divergence counter trend, as well as advanced price pattern itself. So for Aussie dollar, right, with that forecast, we do have a potential setup over here. Right, we do have an advanced pattern setting up as well. So let me pull in all my fib that is relevant. You can see that from this swing high to this swing low, this retracement pulled in towards the 38.2. Alright, that gives us a potential bat pattern formation if price then from here rally higher towards the 88.6 around the 7725. Alright, over there we'll be looking for a short opportunity with our stops above the previous swing high. You give it a little bit of room, alright, for price to buffer around. Right, and of course with targets, there are many approaches that you can adopt. Right, the standard way of doing it is pulling from your A point to a D point. The first target will come in at 38.2. Right, and of course the second target will come in at 61.8. And of course, if you want to go for the home run, you can aim for the target that we shared over here. Alright, we forecast that it can drop as low as 7140, or more conservatively it's at 7270. Alright, so you can actually aim for that as well. Alright, so this is one of the setup that we are looking out for in this week. Alright, Australian dollar. Having said that, we do not just trade the pattern right now. Alright, sometimes we do have different rules to engage the market to be more aggressively triggered, so that we don't miss out on the opportunity as well. Alright, so Australian dollar is one. Do have your own strategy to engage this forecast. The next one I'm going to share with you is Kiwi dollar. Alright, the brother of Australian dollar, they move pretty similarly. So you can see that this one we are also forecasting it to drop this Monday itself today. Alright, when market opened, it did a gap down. Alright, so this is definitely an impulsive move. So right now we are expecting it to go further. Alright, then what you need is again an engagement rule. Alright, basically you need a strategy to engage the trade. You cannot just simply enter at market just because of our forecast. Alright, so again, just like to share with you, based on the 3 strategies that we share with our students, we do have an advanced price pattern setting up. Again, you can see from this swing high to this swing low, the retracement comes in at 38.2. That gives us a potential bat pattern, right, completing at the 88.6, right, at 0.7350. Again, if price do rally up towards this area, we'll be looking for a short opportunity with targets just above our swing high. Again, conservatively, your 38.2 retracement from A to D will be your first target. Alright, and then of course you can ride for second target, third target, or even go for the home run. This one we are expecting, targeting at 69.85. Right, so if we are looking at this, you want to take note that these are different time frame. Right, so from current price to this completion of the pattern, it is some distance away. So you might want to engage on your own entry technique. Right, if you want to ride on this particular setup. Alright, so if price breach above the 717, this count will be invalidated and we need to reassess the entire forecast. But as of now, we are bearish on Kiwi dollar. Right, looking for sell opportunity, targeting at 69.85. Alright, another one to share with you this week. Alright, we do have some, which is Euro Yen. Alright, we did our analysis on the weekend, and we can see that we expect a retracement down, and you can see that gap itself pushes it down towards this region, right, which is highlighted between the 23.6 and 38.2. So this correction has it's potentially completed. Right now we are expecting an up move higher. Again, you need another engagement rule to take that trade because that's just a forecast. So over here on Euro Yen, right, you can see that the overall trend is definitely on an uptrend. Right, so if you look at the Let me pull in my right tool. If you look at this area, alright, this is your previous structure level. You can see that price has retraced back within this zone. If I pull in my fib, alright, we do see some kind of fib confluence between this region as well. Okay, you can see that this is the 50% fib, 61.8 over here, right? Price tested all the way until 88.6. So as long as this low here holds, alright, this low holds, we are bullish on Euro Yen, at least for the one more move upwards. Right, so how you engage this trade is wait for this price action to close. Perhaps you might want to be more conservative, waiting for a bullish candlestick, and then you enter on it. Alright, or if you're more aggressive, you can see that this price action do see a lot of rejection upward. You might decide that you want to enter as of now based on market price. Alright, your target can go above, your stops needs to go below your previous low here. Alright, give a little bit of room for it to wiggle around. Again, you might want to also consider looking at risk to reward. Does this risk to reward allow you to take this trade? Okay, your first target, your most conservative target definitely is at the previous high, right? Because this previous high can act as a resistance. And then if you are going for second target, you can aim for the 127 extension. Right, that's what we usually teach our students. And of course, if you want to go for the home run, you can refer back to this forecast where we are expecting it to complete. Alright, so this is another setup on Euro Yen for this particular week, which is this one is already ongoing because of the gap on Monday itself, which is today. The next one I want to share with you is Pound Yen. Right, this is what we are expecting on Pound Yen. We are expecting a retracement towards the previous support trend line structure over here before any up move that is gonna go. Alright, it can either reverse, meaning this is a previous uptrend. It can either make a huge reversal to the downside, or this can be just a correction. Having said that, alright, let's take a look into some of our entry techniques that allow us to take a trade. As of now, on this 4-hour time frame, we can see it's definitely in an uptrend. This will be our previous structure area. Right, so we'll be looking for an opportunity to take a trade in according to the trend. Alright, basically look for a buy setup if price dip within this zone. So if we put in our fib to look out for any confluence, you can see that 50% confluence over here, 61 as well. Alright, so what we'll be looking out for is this zone between the 50 to 61.8. If price pull in within this area, we'll be having a valid reason to take a trade. Again, our entry, if you are more conservative, put it at 61.8. It gives you a better risk to reward. Alright, you can see this kind of risk to reward of 1.4 is pretty decent. Alright, for just target 1. If you want to aim for target 2, you can pull in your fib. Aim for the 127 extension. Right over here. Right, so again, Pound Yen, you do have an opportunity playing out for this particular week. What you need to do is wait for a deeper retracement within this zone to look for that setup. Right, the last one that I want to share with you in this particular video would be on Euro Aussie. Alright, Euro Aussie, what we're expecting over here is a retracement up higher before another down move. Alright, but we are forecasting this to happen. Price need not all the time follow our analysis. As you can see during today, right, Euro fell pretty significantly. So what we are looking out for is this low is breached. Alright, our analysis needs to recount a little bit in terms of the Elliott wave count. Alright, but just to share with you some techniques, some entry possibility on Euro Aussie. If you look at this, price is definitely moving in a range. This is the high, this is the low, but if you look at the higher time frame, the bias is definitely to the downside, alright, because you can see it's still moving down. So within this 4-hour range itself, we do have some kind of pattern forming as well, advanced price pattern. Alright, I just pull in my fib from this recent high to this recent low. You can see that price tested the 50% Fibonacci retracement. So that gives us a potential bad pattern formation. Right, it looks from X to A to B, B to C, C to D at 88.6. This is the recent dip, right? As long as the price doesn't breach our previous low here, this bat pattern is still valid. Right, so what you need to do is look out for this, wait for price to retrace higher, deeper into the 88.6 at 1.4790 to look for a short opportunity. Right, so if price comes back up, your short entry will be here at the completion of the pattern. Your stop loss above your X point, alright, give it a little bit of room. Again, for pattern, right, your take profit will be using your fib of 38.2 as target 1 and 61.8 as target 2. Right, so your target 1 will be here. Give you a risk reward of close to 1:2, alright, pretty decent trade. Your target 2 gives you a risk to reward of 1:3.2. Alright, so this is on Euro Aussie. So these are 4 setups that are based on this technique, on methodology to engage the trade. It's this 4 potential setup that you can also monitor in the market, right? That might hopefully give you some pits to capture and some profits to take as well. Right, so that's about it for this particular week. Again, to quickly recap on what we went through, this week is all about central banks. Tomorrow, we have Aussie RBA cash rate. On Wednesday, we have BOC. On Thursday, we have ECB. Alright, so if you're trading the market, you definitely need to be aware of these events. Take note of it, and of course, if you are more experienced into it, trade this event because they can give you very nice movement in the Forex market. Alright, so with that, always manage your risks and do subscribe to our channel if you are very new, so that in the future when we release some new videos, be it market analysis like this particular video, some educational series as well, you'll receive those kind of notification and you'll be able to get hold of those videos as they are being uploaded. Alright, with that, always manage your risks, and I'll talk to you next week.